Hello and welcome to this week's episode of Damien's Midweek Markets, which is the show where I talk about what's been going on in investment markets and what might happen in the coming week or so. Now, this week has been pretty exciting. Now, the whole reason has been Donald Trump. If the market actually got to the point where it was unusually calm. So if you look at the VIX, the VIX, which is the fear gauge of the market, it was unusually low and had been subdued down below that 13 level. And if you remember, I always talk about 15 being a level which is you should keep an eye on, because if it's above 15, then it normally is negative for stocks. If it's below 15, then it's positive for stocks. Well, we were very calm, and we'd had the Fed basically backtracking, going dovish and back in the market. The earnings season was largely positive, but I did talk last week about the potential outcome of a double top. That wasn't to say it would happen, but this week the market has pulled back more so than it has done in recent weeks, and we actually had the worst day since the start of the year, where we've had this incredible rally in stock markets. Now, that wasn't. I'm not any Nostradamus, Uri Geller. I couldn't predict that was going to happen. I was only talking about the possibility of a double top, but we're not saying we've got one. But the markets have pulled back, and we are looking at some quite red screens on a lot of the indices. Now, what happened? Donald Trump happened. Donald Trump basically tweeted on Sunday that the trade deal with China had hit a roadblock. So basically, Donald Trump started taking to Twitter, writing about the Chinese, which obviously everybody had priced in the fact that we're going to have a trade truce. Now, a lot of this rally has been about the Fed and central banks being particularly accommodative and having the markets back. But another major part, of course, was the assumption that America and China would have a trade truce very soon, and even a signing ceremony. And a lot of that has come from Donald Trump and his advisors, because they've been spouting off on social media, on the news, that a trade deal was very close. And it turns out that we're probably not. Things are a lot worse than they have been. This week we've seesaw between Donald Trump accusing the Chinese government and authorities of backtracking. China have done the same with Donald Trump. So it actually looks like we're further from a trade truce than we perhaps have ever been. Now, so why did Donald Trump do this? Because given the market has pulled back, and it was always going to be a negative thing to even sort of chuck around a tweet about the trade truce, you have to sort of wonder, why did he do it? So one school of thought is that he did it to try and strengthen his own hand. So if you're going to walk away from a talk, then in some ways that might actually strengthen your hand at the Chinese, whose economy has been suffering as a result of some of these trade tariffs, might actually be more inclined to try and keep things going. But the other reason is, if you look back, Donald Trump has a tendency to start to go on the offensive when markets are high. So we hit an all-time high last week. So markets are very buoyant. What better time to go and unleash a tweet or a tirade on the Chinese and try to be aggressive in the trade talks to get a better deal than when the market's high, because you know the market's going to be pulled back. If we go back to 2018, when Donald Trump, it was just after he'd announced all the tax cuts and the market was rallying as a result of that, he got aggressive again on trade and we had a pullback in markets. Then what happened, if you think at the end of 2018, when the market was weak, Donald Trump was extending the hand of friendship towards the Chinese, and we had that meeting where it looked like we were going to actually have a final truce by the end of March/April, which hasn't actually happened. Now the markets are higher again. Donald Trump knows that the market is going to pull back, but he also knows what better time to do that. And also, if you think next year Donald Trump's going to try and get re-elected, so Donald Trump needs the economy to be strong and also the stock market to be strong, because even though the stock market isn't a direct measure of the economy, if people are feeling good, they're more likely to re-elect him. So now is the ideal time. That is one school of thought. The other is that Donald Trump has just completely lost the plot. So are we at the double top? Is the market going to keep pulling back? Now, it's too early to say, but last week I talked about key levels on the S&P 500. Now, one of them was 2890, and when we pulled back initially, the first couple of days, we had a pretty significant pullback for what we've seen in recent months. It was over at 1% at one point when the futures on Monday morning after Trump had made those tweets. And the stock market, when it went live on the Monday, actually filled a lot of that gap, and it showed a lot of resilience. And if anything, it was quite a bullish sign, because even though Donald Trump seemed to be pulling the plug on the market was still rebounding, buy the dip worked again. As the week's gone on, and it seems like that Donald Trump is going to actually impose tariffs on Friday, then the market has become a little bit more concerned, and we've slowly ground down. It's not been a crazy sell-off, but we've started to break down below that key 2890 level, which is the level at which people start to question the uptrend in stock markets. We're still in an uptrend at the moment, but keep watching. Next touching point is the 50-day moving average, which is around about 2850, 2860. We break through that, then we could be heading towards 2800. Below that, we're looking at sort of 2780, those kind of areas where we're getting towards the 200-day moving average, and that would be a negative sign if the market falls down through those levels. But conversely, if we start to pick up again and we head towards new all-time highs again, that is a bullish sign, and we could get through that 2950, 2960 level and head towards 3000. So it's too early to say what the market's going to do. It's a case of sit back and watch and wait to see what happens, because there's a lot of volatility now. If you look at other markets, I talked recently about the German DAX, how that's been a kind of a clue. It's been a market that has confirmed the bullish nature of stocks generally because of the correlation we've had historically between the DAX and the US stock market. That has started to pull back quite significantly and is back towards that 12,000 level. So keep an eye on that. If we break below that, that's not a positive sign. So everything was awesome, but like all things in investing, you've got to keep an eye on the flip side of any narrative that's out there, the consensus. So there was always a likelihood that we could have the downside, even if it was unlikely in itself, the least likeliest outcome. Now, the other issue that we might have, and this is something that people may not have been paying attention to, are the IPOs that are happening. Now, Beyond Meat is a company that did an IPO in America that is to do with meat-free products. That had an IPO last week, so it was launched on the stock market, and in one day its stock price doubled. Now, if that doesn't sound like a market with a lot of froth in it, that's something we're in the last stages of a bull market, I'm not sure what does. It doesn't confirm that we are, but it does add to that sense that we could be near a top in markets. It's just another one of those things to bear in mind, because it doesn't prove that we are going to be, but it is a little bit worrisome because we've had a pullback since then on that stock. And the other one is on Friday, we've got Uber launching their IPO. So Uber are listing on the stock market. And so it's such a big event that it's one to watch, because it in itself is almost like a risk event, because just like we had the dot-com eras and things and other similar times at stock market highs, when you get that and you get an exuberance in stocks and new stocks, that can be a little bit worrisome. So at the moment, what we've got Trump kicking off. That's the big event that everyone's looking at, what's going to happen with the trade war. But then also keep an eye in the background what happens with these IPOs, because if they're successful, that could be good. If they're not, then it might zap investor enthusiasm. So that is it for this week. Obviously, it's been a very exciting week. Don't forget to look at my 50k investment portfolio that I run on 80/20 Investor. At the moment, I'm quite defensive. So this pullback has been very good because relatively I'm outperforming. So it's always one of those things, you follow a process, don't get carried away by headlines. That's the key thing. So have a look. You can get a free trial if you sign up at 8020investor.com. As ever, don't forget to email me any questions at damien@moneytothemasses.com. Follow us on Instagram at moneytothemasses, and of course Twitter at moneytothemasses with the number 2. Until next week.